Happy Friday, traders. Well, what a crazy week in market so far. It's had a little bit for everyone, bulls and bears. The week started off trading risk off on the back of Trump, his tariffs with respect to Greenland. And so that lasted for a couple of days, or a few days into Wednesday. The S&P and NASDAQ were off a good 2%, and going into Trump's speech at Davos, they continue to trade and make new lows. But then Trump's speech pretty much changed everything. Two things out of that speech that that really moved the market. One was that he was not going to. He softened his stance on Greenland. Wasn't going to use military force. Never mentioned anything about tariffs. And also he did mention the stock market. He did say that he expects that the US market will double, so go up 100%. So we've got a president of the United States that is very much a stock market bull and wants to see it higher. So we saw equities reverse quite aggressively during Trump's Davos speech, and they haven't stopped yet now. So we flipped pretty much then to risk on trading. A few hours after the speech also, we got the headlines that it looks like Trump is got a framework for an agreement for Greenland, and so he's dropped the tariffs. And so that was one of the quickest backtracks on tariffs we've seen so far. It didn't even last a week. And again, that helped with the risk on trading, the aggressive risk on trading that we've seen in the last 24 hours. Precious metals, what a week we've had there. They came charging out of the gates Monday, Tuesday, rallying aggressively, making new record highs, on the back of the Trump tariffs. They had one speed bump, and that's when that headline came out saying that the tariffs were cancelled. We did see gold sell off aggressively, sold off $100, and we did see silver get crushed down to about $90. But this is a raging bull market, and the buyers stepped in and absolutely scooped up gold and silver, and we've just seen silver close up 3.5%, gold over 2%. New record highs for both. Gold now closed around $49.40. We are literally just about $60 away from 5,000. That could happen at any stage today. I mean, considering gold traded about a good $150 plus dollars yesterday. Doing another $60, I could do it now, as who knows. But look, it's going to be very interesting to see how it reacts to 5,000, whether or not momentum just kicks it through, or whether or not we do get maybe some profit taking and some selling, because there must be some traders and funds out there sitting on some huge profits. And silver's also, obviously, it's only about $3.50 away from $100, so that could potentially happen sooner rather than later, maybe today as well. Okay, so yesterday we did have some important economic data that came out of Australia. That was the employment data. Market was expecting that data to come out slightly weaker, so the unemployment rate going from 4.3% to 4.4%, and a headline of about 30,000 new jobs added. The number came out, huge shock, big surprise, came out much lower than expected, so better. Unemployment rate, instead of going up to 4.4, dropped to 4.1%. And we also saw the headline number come out at plus 65,000, so over double what was expected. So look, this was a fantastic jobs report, the only way to describe it. And also we have an RBA meeting in less than 2 weeks, in the first week of February. We've got inflation that is over 3%, super stubborn, around 3.4%. Unemployment rate dropping down to 4.1%. You are getting a rate hike in the first week of February from the RBA. So it takes us from 3.6% up to 3.85%. So one of the only central banks globally that is raising rates. That is a big deal. The Aussie dollar was trading around about the 67.60 area when when that employment report came out. And obviously it spiked and spiked aggressively. We are above 68 cents now, 68.40. It's been one-way traffic. So look, one of my picks for this year in the currency space is the Aussie dollar. I do think that we probably can get up to around 75 cents this year. We've got now the RBA cash rate above the Fed funds rate end of last year, the first time that's happened since COVID. And now with the RBA raising rates, the interest rate differential is going to increase again in the RBA's favour, and potentially, we've still got some more Fed rate cuts. So look, that's going to be a big tailwind for the Aussie. And then also, obviously, the Aussie is a commodity currency. Commodities are absolutely flying. And then also it's a risk currency. So if we do see risk continue to trade well this year, and no big hiccups, look, the Aussie's got lots of tailwinds behind it. So I would not be fading the Aussie anytime soon and looking to buy dips. Today, we do have a Bank of Japan meeting. Now, with the Bank of Japan, they are one of the only central banks that still need to raise rates. Current policy rates are 0.75. The market expects maybe 2 to 3 rate hikes by the Bank of Japan, but they're not expecting the Bank of Japan to raise today. They're expecting the first rate hike to probably be April of this year. But the Japanese do have a yen problem, and it wouldn't be a shock if the Bank of Japan actually did raise rates today, because it would be a tool to get the yen a lot higher, so dollar yen a lot lower. If they did do that, the Bank of Japan is one of those central banks that does occasionally surprise us. So let's see. But having said that, what's going to be important is the press conference, UADA, a couple of hours after the decision, and just to see how hawkish. Look, he will be hawkish, no doubt. And whether or not that can actually move dollar yen as well. So probably going to see a bit of dollar yen volatility today, and bias is probably to be short dollar yen. Other than that, we are coming into the weekend. Look, there's been a lot of military build-up from the US going into the Middle East, and obviously you can't discount that something could happen with Iran. Generally, they do this over the weekend when market is closed. So potentially, look, there's some big gap risk for Monday. Anyway, okay, good luck with your trades, and we'll check back in with you next week.